trading, everyone. I'm Jerry D'Ambrosio, and welcome to this week's special presentation. A few weeks ago, we wrapped up our all-new precision swing trading course, and it was a tremendous success. And tonight, I wanted to share with you an email I received from a recent graduate of that course. His name is Bob, and he wrote me an email a few weeks after the course was over, and he said, in December 2018, I joined the Jockey Club and have taken several courses along the way. The most beneficial for my personal trading was the recent precision swing trading course that you taught with David Paul and Steve Chappell. It was the best investment instruction I have ever had, period. It has been most beneficial to me. Since I started the course in the beginning of May, through Friday, June 19th, my trading account is up 24.78%. There is only one reason for the success: VectorVest, and more specifically, your training, especially the precision swing trading course. It is simply the best. Nothing makes us happier than to hear success stories like Bob. The key to being a successful swing trader is being able to know what type of market you're in and implementing techniques and indicators ideally suited for that market environment. For example, if you're in a trending market, indicators like moving averages or the DPO or MACD or the Midas touch are ideally suited for that type of an environment. If you're in a channeling market, you may know very well that moving averages or the MACD don't work very well in a channeling market. Indicators like RSI or stochastics or support and resistance work very well. And tonight I just wanted to show you some of the techniques and indicators and chart patterns that Bob learned during this course to help him grow his trading account almost 25% in the last 6 weeks. Here we have a graph of VRTX, and I've added MACD to the bottom of the chart. VRTX, it's a great stock, goes from bottom left to upper right. It's in a nice uptrend for pretty much the entire 1 year period that we're looking at. And as you can see, adding the MACD to the chart at the bottom, bullish MACD crossovers, for the most part, produce winning trades. There are some times where you might get whipsawed and bounce out of a trade, exit out of a trade when the histogram bars go negative. But in an uptrending market, you can see how well those negative crossovers protect you against further downside loss. You're always able to get back in. MACD is a great indicator that identifies meaningful changes in trend. So when that meaningful change in trend occurs, the MACD is going to go bullish, and it's going to allow you to enter back into the trade. Again, there will be times where you get whipsawed, but the indicator is going to protect you from further downside loss. Here we're looking at Paylocity, PCTY. This is obviously not a trending stock. We're looking from May to November of 2019. So it's not a trending stock. We're really not hitting higher highs and higher lows, kind of moving in a sideways channel. You can see how poorly the MACD will treat you if you enter on bullish signals and exit on bearish signals. In a volatile, non-trending environment, now that could be a stock environment or more importantly the overall market environment, indicators like the MACD or moving average crossovers don't work very well. So one of the things that Bob learned was, let's take a look at what the market's doing. Is it currently trending? Is it channeling? Is it hitting an extremely oversold situation? And then let's apply indicators that are ideally suited for that type of market environment. And with indicators like the MACD and stochastics and RSI and support and resistance, we have scans in the VectorVest real-time program that find those crossovers. So I'm in the real-time program and I opened up our Pro Trader folder. Notice we have scans for moving average crossovers, support and resistance, MACD, stochastics. And if I just simply click on MACD crossover long, remember what we're doing first is identifying if the market's trending, and then we'll implement and look for stocks whose MACD is crossing bullish. And this is really where the power of the VectorVest system comes in. The search finds MACD crossovers on any given day, but the power is really in the sort. There could very well be hundreds, if not thousands of stocks whose MACD just crosses bullish today. but it's the way the list of stocks is sorted that really gives you folks an advantage. We sort by VST, bringing the stocks at the top of the list with the best combination of value, safety, and timing. Dr. David Paul talks about our comfort index indicator and how important an indicator that is in trending markets. When scanning for crossovers like MACD or Relative Strength Index or ADX, each search is forced ranked so the best stocks are at the top of the list. Some of the other things that Bob learned during the course were chart pattern recognition. One of the patterns that Bob learned was called an inverse head and shoulders. Inverse head and shoulders pattern is characterized by a lower low. We can see the low back here in March was lower than the one back in February. The rally and subsequent pullback winded up finishing at the same level as the pullback back here in February. This is potentially a bullish pattern. Being able to recognize these patterns in real time is one of the things that Bob learned and all of the students in the course learned. It's one thing to recognize the pattern. You have to know how to trade it. So during the Precision Swing Trading course, we taught all of the students how to recognize the patterns, how to trade the patterns. Where are your breakout levels? If you do get a breakout, like you can see here at the end of March, beginning of April, you got a nice breakout out of that inverse head and shoulders pattern. Where's your initial stop loss? Where's your target price? Here we have ASML. Another pattern that Bob learned was a chart pattern called rectangles. Essentially, it's support and resistance. Stock was trending higher off of the March bottom, but then entered into a very prolonged consolidation period. We're looking at least about 2 months here, bouncing back and forth up and down between support and resistance. What we want to do with rectangle patterns, especially patterns that last for a few months, is we really want to make sure that we get that breakout. So what Bob learned was how to recognize the breakout. Make sure the breakout is on high volume. If you do take the trade, there are different ways to manage the trade. You can trade the breakout. You can trade the retest of that support level, or you can trade both. You can trade both the breakout, and if you get a successful retest of support, you can add more to your position. If you do take the trade, where is your initial stop loss? Once you're in the trade, where is your profit target? These are all things that traders struggle with, and I know traders struggle with these things because during a lot of our webinars on a weekly basis, one of the things I ask is, what are some of the things that you're struggling with when it comes to swing trading? And the most common answer is, where to set my stops? Where do I exit the position if the trade goes against me? And then also, where do I take profits? So these are some of the things that traders struggle with, and I'm really happy that we were able to address them in this course. And as you heard from Bob's email, it has changed the way he trades and the way he looks at charts. Here's ODFL. ODFL, let me zoom in right here. Another pattern that Bob learned was one called a bull flag. A bull flag is a pattern formed after a subsequent substantial rise in the stock price followed by a consolidation period, either sloping away from the prevailing trend or it might take the shape of a horizontal rectangle. So he was able to recognize the pattern, understand where the breakout levels are. If he does take the trade after the breakout, make sure the breakout's on high volume. Where is your initial stop loss? And with a bull flag, we teach what's called a measured move. Where should you expect price to move to after the breakout? Here's Skyworks. Skyworks formed what's called a head and shoulders. I talked to you guys a little while ago about an inverse head and shoulders, which is potentially a bullish pattern. Well, a head and shoulders is potentially a bearish pattern. You have a rally, you have a retreat, you have the reemergence of that trend where the stock price is able to make a new high. You get a pullback, you get another rally that fails to eclipse the actual high and essentially stops at the same level as it did back here, forming the two shoulders, the one head. What Bob learned was how to trade this pattern. If you've been long this stock, where should you exit? Where does price need to break down to in order for you to exit the trade. If you're not long and you want to take the position short, where is the breakdown level? If you do take the position short, where do you set your stop? How much lower should you expect price to move before thinking about taking profits? Another pattern that Bob learned was one called a double bottom. Here we had a March low, we had a rally, but then we had a retest of that low, and CTSH formed what's called a double bottom. So Bob learned how to trade a double bottom. Double bottoms are tricky. You might be inclined to buy the stock as soon as it retraces from the previous low. One of the things that he learned was to wait for the breakout. Wait for a substantial move higher so that you can capture most of the move. You don't have to capture every last penny off of the bottom. What you want to do is make sure that the bottom is set and that the stock has the potential of moving higher. So he learned where the breakout levels are, where your stop loss level is, and where you should expect price to move to. And then finally, another pattern that Bob learned was triangles. And this last example is a recent example. So what we're looking at here is a pattern of higher lows accompanying a pattern of lower highs. That's a symmetrical triangle. What Bob learned was to trade the breakout. Wait for the breakout on extremely high volume, either to the upside or to the downside. That's called a symmetrical triangle. He also learned about ascending triangles and descending triangles as well. Not only how to recognize the triangle, but how to trade it. Where are your breakout levels? Where are your breakdown levels if you're thinking about going short or if you're already long the trade? If you take the trade long, where is your stop loss? Where is your profit target? So tonight I just wanted to share with you a little bit about what Bob learned so that he could take his portfolio over the last 6 weeks to a 25% gain. And during our upcoming Precision Swing Trading course, here are the modules that are taught. Dr. David Paul teaches the anatomy of a swing trade. Very important to understand price and volume structure, along with risk management and position sizing. Steve Chappell comes in Module 2 and teaches you a little bit more about indicators and scans for trending markets. I touched on that right out of the gate today, talking about identifying if the market's trending and the ideal indicators to use for that market environment. David Paul comes back in and talks about indicators and scans for channeling markets. If the market's no longer trending, moving averages in MACD or DPO or Midas Touch don't work very well. ADX, RSI, stochastic, support and resistance, more neutral indicators are ideally suited for a channeling market. Steve comes back in Module 4 and teaches you about double tops and bottoms, head and shoulders, inverse head and shoulders, key price reversal patterns that you should know. I'll come in Module 5, teach you guys about continuation patterns, triangles, rectangles, flags, pennants, and with everything that we teach you, we are going to make sure you understand where your triggers are, where your exit criteria is, either at a loss or at a gain. And then finally in Module 6, it's how to set up, execute, and manage your trades. We're going to cherry pick the best candidates. We're going to talk about order entry and also understanding stop losses. And Module 6 is more so a trading session. And we are also offering 6 live mastery support sessions along with these 6 pre-recorded modules. And those 6 live mastery support sessions are there to help you understand the material that's covered in each of the modules. And one of the great things about those sessions, particularly with this course, is we look at the current market. So for example, after I teach triangles and rectangles, flags and pennants, the mastery session for Module 5 is all about what is the market doing right now on that day, and do we have triangles? Can we identify flags? What about pennants? If we do, we make sure we understand breakouts, stop losses, and profit targets. And what we've done, folks, is we've extended our Father's Day special. The regular price for this course is $995, but we basically sliced it in half. So $495, you get all 6 pre-recorded modules, all 6 live mastery support sessions taught by myself, Dr. David Paul, and Steve Chappell. You can go to that website that you see at the bottom, www.vectorvest.com/PST. Here are the dates for the live mastery support sessions. They will begin on July 7th, every Tuesday at 2 p.m. until August 11th. Well, folks, I hope you enjoyed today's special presentation and have gotten an idea of what Bob learned in the Precision Swing Trading course so that he can not only take his portfolio to almost a 25% gain in the last 6 weeks, but he became a better trader implementing some of the techniques and principles that we taught during this course. Well, have a great weekend, everybody. We look forward to working with you.
Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.